Hey guys, and welcome to Shay's Stocks. It is now day 33 and video number 24. It's going to be a slightly information intensive video this time because I just want to fill you in on where we're at, get a bit of a review from the cat. Hey, say hi Daisy. Bit of a review from Gemini and go through how we're doing, what stocks we have settled on because I am settled now, and give you Gemini's a review. So yeah, first of all, we have ONDAS at 28%. That's up 60% from our purchase start. SoFi 22% of our portfolio. That's up 6%. We've now got NVIDIA, which in an hour, and it's been up and down and sideways and not doing a lot. Good entry level now. Could do nothing, but I think it's pretty safe. So it's a safe play, 20% of our portfolio, and that's up 0.5% today. Novo Nordisk is 14% of our portfolio, that's up 16% in total. D-Wave Quantum is 7% of our portfolio, and that is up 16% also. And IonQ is 7% of our portfolio, and that is up 14% today. So all in all, you can't argue with those numbers. We're doing pretty damn well for the first, we're in just the first month of 2026. We've got a good mix of plays, but let's see what Gemini thinks. So I'll just read it a bit softly today, so just bear with me. Okay, this is a high conviction, high risk growth portfolio. You have a very clear barbell strategy. Who knew? I have a strategy. The core is anchored by world-class leaders NVIDIA and Novo Nordisk, while the satellite positions ONDAS and Quantum provide massive upside potential but carry significant volatility. Here is a rating and breakdown of your holdings as of early 2026. Okay. The safe anchors, 34%. NVIDIA 20%, the gold standard of AI. With the Vera Rubin platform moving into full production for the second half of 26, NVIDIA remains the undisputed leader in data center GPUs. While the valuation is always a talking point, a 65% plus revenue growth and dominance in the AI software stack, CUDA, make this a necessary core holding for any tech-heavy portfolio. Novo Nordisk 14%. Status, the healthcare hedge. As the leader of the GLP-1 weight loss diabetes space with Wegovy and Ozempic, Novo provides steady cash flow and defensive stability. Outlook. 2026 is a transition year as they face competition from Eli Lilly and pricing pressure from Medicare. However, their pipeline, specifically the oral version of semaglutide and the drug amitriptyline, keeps them in a dominant position. That has been shooting up lately. So, shooting up. Yeah, I wasn't trying to be funny. Okay, the growth engine of the portfolio at 50%. We've got ONDAS 28%. Your largest and most speculative position. Remind everybody here that we're up 60% on this speculative position. We hit the right company with the right people at the right price at the right time, where everybody was moving into small caps. With the volatility in America, potential for military action here, there, and everywhere, ONDAS was very well positioned. I called it, I backed it, and I'm here to enjoy the profits with you guys. So what does it say about ONDAS? Your largest and most speculative position, ONDAS is a leader in private wireless network and autonomous drone technology. The stock had a massive 2025, up 280%. In 2026, analysts are looking for revenue to triple to over 110 million, get a new mouth fitted. If they hit these numbers, the story becomes a reality. Well, they haven't hit those numbers, and it is still just a story, and it's up 60%. So this could genuinely be a 10x, or it could just fall off the face of the earth. But we're well on track to the 10x so far. Okay, SoFi, 22%. The fintech disruptor. SoFi has successfully transitioned from a student loan lender to a full-service digital bank. Outlook. Under CEO Anthony Noto, SoFi is seeing roughly 38% revenue jumps, with price targets for 2026 sitting around $36. It's currently 26. This is a play on the death of traditional brick and mortar banking and the rise of Gen Z millennial financial management. There you go. Okay, the moonshots. 14%. D-Wave and IonQ, 7% each. The quantum duopoly. These represent the two main approaches to quantum computing, D-Wave, annealing, and IonQ, trapped ion. Both have seen triple-digit gains recently. IonQ is expanding through acquisitions, Oxford Lonix, Vector Atomic. God, I can't talk today. Oxford Lonix and Vector Atomic, that's not easy to say to be fair. While D-Wave is finding its niche in logistics and manufacturing optimization. They are still highly speculative, but having both spreads your bet across competing technologies. That's not good grammar, but it makes sense. Yeah, I've covered me bets basically. Portfolio rating 7.5 out of 10. Okay, Straps exposure. You are perfectly positioned for the three biggest themes of the decade: AI, automation, drones, and weight loss. Quality. Your core NVIDIA NBO is extremely high quality. Good. Risks. Concentration. Having 20%, 28% in a small cap like ONDAS is very aggressive. If they miss an earnings report, your entire portfolio will feel it, but we're 60% up. I do have sort of in the back of my head, if it drops to 10% up overall, that would suggest a huge market swing. That could be a market crash. That could be severe problems with the company. Maybe we get out. Maybe I wait till it drops all the way back to our original stake, but I don't plan on going less than the original stake. So it gives us a cushion now to hopefully, see it go down and do something about it, or maybe just write it out and see if it goes back up. Volatility. Outside of Novo Nordisk, your entire portfolio is high beta, which, to be honest, guys, is flying at the minute. That will feel any crashes. It will also react and overreact to good and bad news. But now was the time to play it, and I think we got into some good stocks at the right time at good prices. So it's going to swing much more than the S&P 500. So that's all they're saying, really. It's given me a decent 7.5 out of 10. Not bad for my first portfolio. It's got a nice spread. If the market doesn't do particularly well, the S&P 500, normally you get a swing and the medicine will do well. The Novo will do well. Notice we've got rid of Nike. Yes, it's going to go up, but I wanted an AI play. And NVIDIA is one of the biggest stocks on the planet, biggest companies on the planet, making huge money. They've just been allowed to sell chips to China. I think they've ordered about 2 million chips at $20,000 a chip or something insane, which hasn't even been priced into the numbers yet. So they're only going to go up, but I don't think they're going to go up now because everybody's investing in small caps and high beta. So, NVIDIA will probably just sit there keeping your money safe, which is fine, which, it's a kind of crazy thought that this up and downy type AI play could be, your safe play at the same time. But I've got in at a level that I think even if it goes down a bit, it'll come back up and it will go higher. And in my head, NVIDIA should be around, I'm looking at Alphabet, Google, 8-9 months ago, $150. Right now NVIDIA is 185, I think we got it for. So it's a bit higher than that. But, Google went on this massive run. And why did they do that? Because they've got oodles of money. NVIDIA is smart enough that they can put that money anywhere they want. And if this market dries up, they will go into a different market. They will continue to make money. They will expand. They will invest. They will grow. I don't see... I look at all these major companies, $200 to $300, $400, your Metas, your Googles, your big caps, your Apples. And I don't see why they shouldn't be in that conversation one day. 12 months' time, we could be sitting here going, bloody hell, NVIDIA, They've gone 180 to 200. They've gone 220. They've gone 250. They're sitting at 300 now, 330, and do a Google type run. So that's why I'm getting in now. I don't expect it to do anything for 2 or 3 months, but their next earnings will be great, and it'll probably still go down because I don't know why the market doesn't give them enough respect. But that was the same with Google. Google wasn't getting respect 12 months ago. Now they're the biggest entity on the planet in terms of business, one of them, and still cheaply priced at 330. So yeah, that's why we're in Nvidia. It's a bit of a placeholder to keep our money safe, with a bit of excitement thrown in. You know, as far as placeholders go, that's a very, very exciting one. So yeah, that's our portfolio, and it's not going to change now. I know I keep saying that, but there are days I look a bit further into things. I was raving about Nike, and I still think Nike will go up 50% over the next 12 months. They're not going to go on a mental run like Nvidia could and maybe go up, 100% to serious bucks. They're just not going to do that. But either one of those plays is fine. It doesn't really matter. They're going to probably produce the same amount of money. I'll probably make more money off Nike because I get a lot more shares. But it's the plays I want to be in. The ones I want to track and follow and research and be excited about the news that comes out. That's what I'm doing it for, as well as the money. And Nvidia just does it for me at the moment. So I do want them to go on a Google type run, and I want to have called it 7 months ahead. I want to be a friggin' stocks genius and be able to put this video back up and let everybody know that I called it right and I know what I'm doing. So there you go, guys. I think we're doing very, very nicely. We're very, very comfortable. We're in profit, and it's a good profit. It's enough profit that, even if we had a 10% market crash, or a correction, sorry, because it wouldn't be a crash at 10%, or a 20% correction, which would be quite extreme, I think we would still be able to ride that out and not sell anything. If we had a 40% market crash, we're talking a full 40, 50, 60% crash, a full crash, I would have time as the market was decelerating, assuming it didn't all happen in one go, which I've never experienced a market crash. I don't think it does that. I would be able to get out, and then at the bottom of the crash, get back in again with at least our original stakes. So, we have a plan for all eventualities. Different stocks, different fields, different amounts, expensive ones, cheap ones. There's loads of thought gone into this, and hopefully you feel nice and reassured like I do. It's been a hell of a start to 2026 in terms of the stocks. And ONDAS is absolutely flying 60% up, guys, since we got it 60%. And it's sitting comfortably. It's setting new lows all the time. So it's not just going 12 to 9 to 14 to 8 like it used to. Now it's just going 11s, chuk chuk chuk, 12, chuk chuk chuk, 14, chuk chuk chuk. And it's setting those levels. So that's what you want. For what was a very volatile stock, and still has the potential to be, it's not acting that way. And I think as it grows and gets more money and cash flow, it will just continue to do what you'd like it to do. Up a bit, stable, up a bit, stable, up a bit, stable. And that to me is the very graphic of what a company should be that is becoming less of an idea and more of a practicality before hopefully becoming an industry leader. So there we go. Right, guys, thanks for watching SHAY'S Stocks. Really appreciate your time. 14 minutes I've taken up. It's been a lot of information, but I just wanted you to know where we're at. There won't be another one for quite a while because I'm not changing anything. If it goes up or down, it's irrelevant now. Maybe, a month might be a good time to review February time, see where we're at. But we're in a good state. You can relax, and we can enjoy it. We can sit back, and we can see what happens. And we can research our companies, and we can be involved in those because, guys, we all own a little bit of each of those companies. That's the exciting thing. We're helping them to grow. We have a vested interest financially, but also mentally. It's really cool. So yeah, hopefully you'll look into those companies, do your own research, and agree with me that they are brilliant picks. Right then, guys, catch you later. Thanks for watching. Bye for now.